Sterling was positively pounded Thursday night and Friday morning to finish its trading week. And so now we ask ourselves what's happening next. As we can see here, we had the initial plunge in the pound following the Brexit vote back in June, but it had stabilized through the summer. As we moved into September, we saw distribution kicking in once again, and slowly but surely the pound was declining. Then once it breached this 128 support level here, selling started to accelerate, and then once it breached 125, the bottom really fell out from under it, driving it down below 120 at one point before it's bounced back. What's happened here? Well, we've seen in the last week or so that a number of people have started to take sides and talk about what could come out of the upcoming Brexit negotiations. The UK government has talked about triggering Article 50 by March to get things going, and we've since had some tough talk out of German Chancellor Merkel and more recently French President Hollande. Traders need to recognize, though, that at this point in negotiations, especially when they're not face to face, they're in the public and the media, and it's very early stage, that of course people are going to talk tough. Of course people are going to stake out extreme positions that then they can back away from over the course of negotiations. You don't start in the middle because then you're more likely to lose ground. If you want to win, you have to start out at an extreme end, and everybody knows that. But the markets have, but it's certainly rattled the markets here. I think what's really happened too is a combination just of people getting rattled, but also we've had I think it was a wave of program selling. I think once the 125 was breached, I think we saw a lot of automated selling, a lot of stop losses kick in. That drove it down, and then we saw it again under 120, but that's why it didn't hold, because we've seen now a lot of the weak hands have been flushed out of the market, and we have seen sterling start to rebound. As we move forward now, here it's important to remember if Article 50 doesn't get triggered till March, that would mean a negotiation deadline of March 2019. That's almost 2.5 years from now. A lot can happen over 2.5 months, let alone, or even 2.5 weeks, let alone 2.5 years. First of all, we've certainly got the U.S. election coming up. We've got ongoing banking issues in Europe. We've got a referendum in Italy at the end of the year. We've got elections in Germany and France in 2017. It's quite possible that by the time negotiations get serious, a lot of the players may have changed, and a lot of the people that are talking around right now might not even be at the table when the real decisions are being made. So it's important for us to recognize that. Clearly, we've had some sort of washout here. Is it the beginning of the end or the end of the beginning? It's still hard to say, but let's look at where we're at now. It looks as though we're probably moving into some kind of a trading range here, just as we saw previously between 128 and 136. We're probably looking at a floor now of about 120, and the top end either around 125 or around 128 for cable. Recently, it seems to be settling into this 124 to 125, 123, let's call it, to 125 area, somewhere in the middle of this zone. We're getting extremely oversold here. We're as oversold as we were back in July. At that time, we had a pop from 128 to 135, so we could get a rebound as well. But it would be important to note that unless this 128 is retaken, we are still in the downtrend on it, although the floor, it does look like the potential for a floor around 120. However, we also cannot rule out a retest some point down the line. So likely what we're likely to see is some kind of action similar to what we've seen in crude oil, where between 40 and 50, where we had a fairly established trading range get established, but we had some very sizable swings within that range. Don't be surprised if we see the same sort of action in cable in the coming months. I'll also try here to show euro pound. Here we go. Euro pound similarly has had a big spike here. It's gone up above 90, traded up as high as 93. It's now slipped back into the 88, 89, 90 area, and that's where we might see it stabilize. It's gotten extremely overbought on the RSI, very vulnerable to a correction here, and also something to consider. Europe's economy is not going all that great right now. They're struggling. Their banks are struggling. They've got issues with banks in Germany as well as Italy, plus the political side. Plus, on top of this now, the more this goes up, the more the UK becomes competitive, increasingly competitive relative to the EU. That's the last thing the EU needs, on top of all their internal issues, is to suddenly find out that Brexit is making the UK even more competitive and especially since their negotiating stances seem to be to try and avoid that. So here the higher euro at some point the ECB will likely try and fight that and try and put a cap on it, just on the basis that it just crushes them economically. So that's something important to note. And We'll also take a look here at the pound relative to the yen. And we can see the same sort of action here. I mean, it's been in a downtrend for quite a long time anyways. There was this plunge here from 160 down into the low 130s on the initial vote. It had stabilized between 130 and 140. We did have some distribution here, and then once 130 got breached and 128 to 130 support zone got breached, we did see the bottom drop out from under that as well, the low being about 124. So we're back up around 128 and trading between 127 and 130 at the moment. This looks like an area where it could potentially stabilize. But so we've had a massive sell-off here in sterling. It looks like we've had a big washout and a rebound now, and it looks like we could start to see it stabilize a bit more at higher levels, although we would still expect to see some sizable swings both intraday and over the coming days and weeks as the talk about Brexit intensifies.